Canadian steel and lumber industries will always be at the heart of Canada's competitiveness, our security.
Between 2025 and early 2026, the U.S.-Canada lumber trade became a critical flashpoint in tariff escalation. The Trump administration imposed and expanded tariffs on Canadian softwood lumber, raising duty rates well above historical levels. These tariffs target the material used in framing and residential construction components across America. Canada supplies a large share of softwood lumber to the United States, making these trade actions particularly disruptive to traditional supply chains.
The core of the strategy in Budget 2025 is to unleash $1 trillion in total investments in Canada over the course of the next 5 years. That alone will increase our GDP by over 3.5%, or $3,500 for every Canadian worker, more than twice what's being taken from us. We must protect our workers and our industries who are most exposed to U.S. tariffs. That means in steel, aluminum, auto, and lumber sectors. Help them bridge to the future.
Canada responded by considering limits on lumber exports to the U.S. and rerouting shipments to other markets as the trade dispute intensified. This reduced the stream of Canadian wood into the U.S. construction market at a critical moment. The United States already faces a housing supply shortfall. Fewer materials for new home construction compound existing supply constraints and create upward pressure on housing costs. The National Association of Home Builders has warned that tariffs function as a tax on imported building materials. These taxes increase costs for U.S. builders and ultimately for home buyers. Canada provides approximately 1/3 of the lumber consumed in the United States. Any disruption to this supply directly impacts construction timelines and project budgets across the country. The Trump administration's tariff strategy aimed to protect domestic lumber producers. However, U.S. lumber production cannot meet current demand levels.
Tremendous tariff on lumber and things as such, and yet we don't need their lumber. We have more lumber than they do. We don't need Canada's lumber.
American sawmills lack the capacity to replace Canadian imports in the short term. This gap means that tariffs raise prices without providing viable alternative sources for builders who need materials immediately. Financial analysts note that these trade policies contribute to higher lumber input costs and tighter supply. The U.S. housing market's affordability crisis risks being made worse, especially for new construction. This could slow building activity at a time when more housing is critically needed. The United States faces a shortage of approximately 1.5 million housing units. Restricting lumber supply makes closing this gap more difficult. Canadian lumber producers have explored alternative export markets in response to U.S. tariffs. Asian markets, particularly China and Japan, represent growing opportunities for Canadian wood products. European construction markets also provide potential destinations for redirected Canadian lumber. This reorientation of trade flows means that even if U.S. tariffs are reduced or removed, Canadian suppliers may have established relationships with other buyers, making it harder to restore previous supply levels to the United States. The National Association of Home Builders calculated that tariffs on Canadian lumber add thousands of dollars to the cost of a new single-family home. These increased costs get passed directly to buyers. First-time homebuyers face particular difficulty when prices rise due to input cost increases. Construction companies cannot absorb these costs indefinitely without reducing building activity or passing expenses to consumers. U.S. lumber futures have shown volatility throughout this period. Prices spiked when tariff announcements occurred, then fluctuated based on supply expectations and policy signals. This uncertainty makes long-term planning difficult for builders who need to lock in material costs months before projects begin. Some construction firms have delayed projects due to unpredictable lumber pricing. The tariff rates on Canadian softwood lumber have reached levels not seen in previous trade disputes. Earlier conflicts between the U.S. and Canada over lumber typically resulted in tariffs in the range of 10 to 20%. Current rates have exceeded these historical benchmarks. The Trump administration has threatened further increases if Canada does not make concessions on trade policy. Canada has challenged these tariffs through World Trade Organization dispute mechanisms. However, these legal processes take years to resolve. In the meantime, the tariffs remain in place and continue to affect trade flows and prices. Previous WTO rulings have generally favored Canada in softwood lumber disputes, but enforcement of those rulings has been inconsistent. The housing affordability crisis existed before these tariffs were imposed. Median home prices in the United States have risen significantly over the past decade, while wage growth has not kept pace. Adding material cost increases through tariffs makes an existing problem worse. Housing economists warn that supply constraints driven by policy decisions will have long-term consequences for home ownership rates and household formation. Builders report that lumber represents a significant portion of construction costs for wood frame homes, which constitute the majority of new residential construction in the United States. When lumber prices increase by 10 or 20% due to tariffs, total construction costs rise accordingly. These increases reduce profit margins for builders or get passed to buyers as higher purchase prices. The timing of these tariffs coincides with demographic pressure for more housing. Millennials and younger generations are entering peak home buying years. Immigration continues to add to housing demand. The United States needs to build more homes to accommodate population growth and household formation. Tariffs that restrict building materials work directly against this need. Canada has not implemented full export bans on lumber to the United States. However, Canadian producers have reduced shipments in response to tariff uncertainty and explored other markets. This reduction in available supply has measurable effects on U.S. construction activity. Projects face delays when materials are unavailable or priced beyond budget constraints. The trade dispute over lumber illustrates how tariffs intended to protect domestic industry can create unintended consequences. U.S. lumber producers benefit from higher prices, but U.S. builders and home buyers bear the costs. The net effect on the American economy depends on which impacts are larger. Most economic analyses suggest that the costs to consumers and builders exceed the benefits to domestic lumber producers.